Good morning, Predicted Trades family. Hope everybody's doing good. Hope everybody had a great weekend. Hope some of you swung some puts, but don't worry if you didn't. We're still going to have opportunity every day. So, let's dig in. Futures gapped down and just kept on going through key levels, settling back at previous low of year. I think I have that over on this trailing set. Yeah. Come on. Not this one, this one. Not this one, this one. Yeah, I think that 3807.5. Either way, we are, with the gap down, back down there, low of year. And if we come back over here, it was actually kind of clearer. So there was low of year. We've already broke that a little. I do have some old POCs here. 3907 is kind of where we settled on Friday and held, and now we've gapped down to the other. So, wouldn't be surprised for a little upside to fill some gaps to get back to where we were before heading lower. Oh, yeah, excuse me. And I also wouldn't be surprised to just see us go sideways a little bit here. We are arriving down at a 2-day and a 1-day squeeze after getting near the tops of them. That 4-hour squeeze is what kind of held us down as we just wedged for 2 weeks straight and then gave that wedge out. Fell below moving averages, now way on down. The daily 8 has caught up with 4,000 even. So, as we get to the bottom of these daily squeezes after such a big drop into this week, which is OPEX week, we need to be prepared for them to do a little bit of chopping between key areas, not really going lower or higher, as they are known to do on a quad witch week. Real quick, let me pull up our economic calendar to see what else we have coming at us this week. Okay. So today around 11 a.m. we'll be getting some New York Fed 1-year, 3-year inflation expectations. PPI tomorrow. And then Wednesday, the big day where we have retail sales, import price index, Empire State Manufacturing Index, yada yada, but the big one, FOMC, at 2 o'clock with Powell speaking afterwards. There could be talks of a higher rate hike at this meeting. There's been some rumors of 75 or 100 instead of the 50 base points that they talked about, so keep an eye out for that. But in a sense, this whole drop may have already been pricing that in, as in we may have dropped because of those rumors before FOMC. And then Thursday we have jobless claims, and Friday, not much. So we'll see how FOMC goes this week. Kind of the big event. So for ES today, already down so far. I already hit a full ATR at the in between the daily and the 2-day squeeze. I will prepare myself for a turnaround to head back up after 3 big days down. That got us right back down to low of year. So I'll be prepared for cover pops, filling gaps, but I'll also be prepared for some sideways action at these key levels. And when we're in between these two POCs, two old POCs, for 28 and 29 basically, right? So I could see us get a pop, fill the gap, and really just stay in between these two this week. And we can also see more downside, right? We start breaking this POC. If we start testing that POC, we will be down in this 2-day squeeze. If we slip below that, key levels down below. So, for if we continue, and it most likely won't be today after being down a whole ATR, I am expecting a little sideways, a little cover pop, an attempt maybe to fill the gap, but if we just can't get going through key levels, we'll probably go a little sideways. If we give out pre-market low in that POC at 37.93, we do have this 2-day squeeze bottom at 37.75. That could hold us up. If not, we're rolling right to 37.41 and then 38.66 or 36.86. Yes, 36.68. Jeez Louise. Get my eyes checked. All right. Let's move on to NQ. NQ already down at second Keltner and the bottom of this daily squeeze. Just like we can go from top to bottom, as long as we can hold it and not head lower, and I get a little sideways action at it, we could move off of this daily squeeze bottom and make our way back up for potential gap fill. Yep, so I'll be playing off of the daily Keltner, the daily squeeze bottom. There's a little sliver of a 2-day as well that started to form. So all in all, not expecting NQ to dive through these, but we'll see because we can easily dive through them. The daily 50 way back above is slowly caught up inside of the daily squeeze and back at almost 13,000. So if we can hold, make our way up, do a little gap fill, we can get back to moving averages to test them. You know, obviously recognizing that we're back down at low of year. And we can head lower, right? But so far we're trying to bounce on these futures back at low of year. So let's see if we can hold and try to trek higher. Oh, they're ready. Giving up that 1900 was huge. Sent us right down to the daily moving averages and then down from Keltner to Keltner. Daily squeeze bottom a hair lower for the ruddy. So let's see if small caps dip a little further to find support before coming back. Let's take a quick look. And the ruddy not even quite back at low of year. Trying to base at the last point that it bounced. And now we have daily squeeze to also help us there. And really, let's see, 36 points up. Maybe about a 2-day journey to get back to the moving averages. But let's see if we hold this base on the ruddy that we did previously and go a little sideways before heading back up or a lower. YM. So YM pretty much back at low of year. Definitely where these two candle close, it's trying to hold up, right? We still have low of year a little bit lower in this daily squeeze cloud. But as far as, the sell-off that we had that set a new low of year, this bounce back, now as we come back near low of year, we have a lot of daily squeeze, 2-day squeeze clouds there for support. So as long as we can hold those, I will be taking positions long to head back up. And then once we start to break them, I'll focus more short. But, let's recognize that the move has happened. Now we're back at where we should settle, maybe even go sideways before heading back up or further down. So don't just rush into puts thinking we're going to drop another 100 or 200 points today, right? A lot of things have already gone a full ATR starting to come back. So we got time. It's just Monday. Apple. A big old gap. Whoop. A big old gap down and peeking its head outside of this daily squeeze bottom. So let's see if Apple can hold 132. Gave out that 138 on Friday, selling off into close. And gap straight down to the next key level on my Apple chart. Right? So definitely mark these key levels. Let's see if we can hold this 132. If we have to reach down to this 131, which is an old POC, as is this 129. So a couple of key levels. Looks like we set a new low of year a pre-market, but let's just see if we can hold at 132.6, head back up, fill the gap before heading lower or back higher. And let's see if Apple rejects this daily squeeze cloud at all, which we'll be stepping over, right, in between these levels. So AMD. So it should kind of be apparent AMD had a nice trend line from the lows. And we peaked out of it just a little bit, but it closed above it. Bounce, bounce, bounce. Now we are below it. Gapping to it and through it. So let's see if these recent lows on AMD can provide up some bounce points. Go ahead and mark them, right? But I don't like to do a lot of charting in front of you guys live. I like to have stuff prepared. So keep an eye, see if these recent lows can provide a base around 90 for AMD to attempt to fill the gap back to the daily 50 and above this trend line. You can see that we wicked below it, but buyers stepped right back in to push us above it. So we could see the same today, or we could just settle at 90. we could always, yeah, right, we could always give out those levels and head lower to this daily squeeze bottom or this 2-day, which is back down at low of year. So if AMD starts to give out these levels where we've bounced before, could be playing catch up to get back down to low of year. Amazon. Oh, from one Keltner up at that split. Now we're at the second Keltner down, almost at third. And back down at this low of year, almost. So let's see if that can hold for old Amazon here. And you know, to the upside, daily Keltners, gap fill, and moving averages. Cat. Cat, cat, cat. You'll notice a couple of key levels and how we just went from one tapping all green days straight to the other. Topping out a little above and then right back, rejecting and heading back to key levels. So just like I mentioned on AMD, some of these individual names could potentially play catch up, right? Which might make the market head lower unless they're doing a whole bunch of rotation, which we should expect them to do this week. So be ready for that. Google. Got about 1 month left for this stock split. Gapping right down to low of a year. So let's see if some of these key levels that provided support on Google, especially this old POC at 2088, and this daily squeeze cloud, which is now kind of caught up to these levels. Let's see if we slip down and can hold 2120 or 2088. Could be a nice long to start setting up on Google, since we only have about a month till that stock split. And that daily 50 is caught up with the top of the squeeze clouds. So pretty much everything 1 day, 2 day squeezes that are sitting right back at low of year to provide support that could send us back up. Banks are weak, but almost back to some key levels here. On GS, that's 275. If I leave it yellow, it's usually because it is a previous all-time high. So, let's see if that provides some support to allow this to at least go sideways, maybe even back up to fill the gap. JPM not quite as weak. Trying to hold above previous low of year at that 115. So let's see if we want to go down and test it. Third Keltner as well before heading back up. And you know, third Keltner is typically oversold. We can drop below third Keltner and keep pushing, but typically when we get there, we're a bit oversold and we come back. Oh, meta. Lots of squeezes here for support that could allow Facebook Meta to hold previous low of year, this 170. And start the journey back up above these squeeze clouds, which kind of end around that 180. So let's see if Facebook can hold, get a 10-point move to fill the gap and try to get back out of the squeeze bottom to head to the top. No, and I'm not just trying to give upside thesis today, right? But we are down so hard in 3 days from the mean to like third Keltner. Going to be prepared and ready to play some upside. We'll also read the signs. If we can't get through pre-market highs, if we can't fill gaps, I'll be ready to short. So, Microsoft. New low of year, but also pretty much at that third Keltner and at daily and 2-day squeeze bottoms. So we should see a bounce anywhere from this 240 up to 245 and hold to head back and fill the gap, at least. Netflix. Netflix made it back to the daily mean. Now it's back down at second Keltner. And also where this daily squeeze has started to catch up to. So let's see if 174, 172 can hold Netflix up to get in an attempt to get back and fill this gap at least before heading higher or lower, right? Nvidia, not quite setting a new low of year. Trying to settle at this 160. We do have this squeeze bottom below. And third Keltner just outside of that and just below low of year. So, if chips are weak, we can slip down into this cloud and tag third Keltner before heading back up. We could hold previous low of year and the squeeze bottom before heading back up and potentially filling the gap. QQQ already setting new low of year. Let's see if it can get back above this squeeze bottom daily and hold that 282, which is basically where we bounced before, in an attempt to push back up and fill this gap. QQQ has one of these wacky wicks that already filled the gap. Usually it's like a dark pool print. And sometimes it can be a precursor for we might end up here today to test this wick, which would be filling the gap. So be prepared for that. Roku. Well, Roku, just your 1, 2, 3 quadruple bottom attempt at this 75, 77.5 with a bunch of squeezes down here trying to support it 1 day, 2 day. So let's see if we can get a quadruple bounce at 75, 77.5. Head back to fill that gap. And the daily squeeze is right up at that daily 50 where we just sold off from after that rumor that Netflix is looking to acquire them. Shop. The split 10-1 will be 628. 1, a 2, a triple almost bottom here at around this 310 to 320 where this daily squeeze now sits and is getting very tight, only about 100 points wide. So let's see with what was that, the 28th? Quit it. 28th. So just 1 or 2 full weeks left. So don't be surprised if we see shop find its base around 320, 300, head back up to 400, 420, and try to push a little higher before that split. Maybe to these recent highs around 480, 500, anything possible, and they love to run things up into a split, unless it's Amazon. SPX. We left some gaps behind, and since we'll be gapping down again, we'll be leaving another gap. So mark your gaps. And if we can start to hold, you know, we're basically going to be opening back near this low. So let's see if that 38.10 can hold. If we can get it back above 38.41, we might be able to get through and fill this gap. This 38.83 is an old POC. And we do have that third Keltner just below that 38.10 at this 37.96-ish. So 3800 should be big, should provide support. And we have some nice gaps above to get it back to filling. SPY. Come on. SPY new low of year. Tiny sliver of a daily squeeze there, trying to hold us up around this 380. And some gaps as well above. So, and we're also at third Keltner on SPY. Sometimes we can move too hard too fast, and we need to settle and have a little relief pop before really heading lower. So be prepared for all that. Square. Oh, start to peek his head outside of this daily squeeze bottom. Not quite to that previous low of year. And just like everything, let's see if it can hold previous low. Got that third Keltner at 63 in case it wants to set a new low and get back above this daily squeeze. Tesla, Tesla, Tesla. Well, hopefully you guys can see with our handy dandy trend tool, we are trading down in a channel. And we are now at the bottom of it and arriving back at 650. Some key levels there. So let's see if Tesla can hold this 650, last spot that it really shot up off of after setting that new low of year. Back at that 617. Yeah, we'll get to VIX. Yeah, we'll get to VIX next. So on Tesla, let's see if this channel bottom and this 657, since it's leading us down to it, can hold today or tomorrow as they overlap tomorrow. It could provide a nice springboard. Stop. We also have that daily squeeze bottom right down at that next Keltner, second Keltner down, at about that 640. Which, you know, if you look, a lot of these wicks hit 640 before we got back above 657 and took off from it. So let's see if 640, 657 provides a floor for Tesla to go sideways and get back to some moving averages and back to 700. If the second Keltner daily squeeze can't hold us up, we could vacuum quickly to a new low of year and that third Keltner down. And now a VIX. VIX, after trying to stay under 25, ultimately could not even get down to that 23.33, held 24 pretty darn well. And right back up through 28 through 30. With the gap, we're now up near 32. That does put us near the top of a daily squeeze. We have this 33.52, which is a very key level, and 35.30, very key level, up at the top of a 2-day squeeze. So if we are to see more downside on the market, VIX will get up and test this 33.5, 35.30, where I do expect us to do some topping out and come back. And we have a gap there to fill from that 29 up to about 31.5. So let's see if VIX wants to just keep going. Hold this daily squeeze top 33 to push through these two key levels for a test. Or if this daily squeeze and second Keltner up is going to cause VIX to turn around, come back a little to fill the gap, which will allow the market to do a little gap filling. So hopefully this was helpful to everybody. I will be throwing the Today's Beast tool out there. And just a heads up, been doing some research into how to make this daily Beast tool available on your end to just hit an update button. What that will look like is that I'm going to make likely 3 versions of this tool, and we are likely going to condense our tiers in predicted trades down to just 3 tiers. Kind of like a, platinums and diamonds will probably go together. Probably like a silver, gold, and diamond groups. So there's going to be a little, moving around, a little grouping folks together, and then likely 3 separate tools for those different tiers. And, each tier will only have certain tickers kind of thing. We're still trying to work it all out. But I did kind of do an audit of all the tickers that everybody has. And there's basically like 3 main tickers that everybody has. And then a few others that some people have. But ultimately what that's going to look like is I'll be setting up likely some new channels in the server to distribute this daily for each tier group to go in and grab their daily tool. One of the folks in the room, I can't remember who, or I'd give them props right now, but they showed a very easy way to import that tool. If you go to, and I haven't shared today's tool yet, but I'm about to. There we go. If you come in here, where am I? Come on. If you come in, and again, I'm about to share today's tool. This is Friday's tool, but if you copy link, and then you come in here, open shared item, like this, and then just remove whatever the date is, so that it's this BSON 4. Once you hit import, if you do this every day, what will be on your charts is called BSON 4. So when you import, call it the same and hit import, it will ask, is it okay to overwrite the current one you have? This is BSON 4. And if you hit OK, every chart where you've applied that BSON 4, it will just swap out for the new one. So you don't have to go around from chart to chart adding in the Daily Beast tool. It will just, if you import it like this and call it the same name every time, it will overwrite what you have. And then hopefully within about a month to 2 months, I haven't got a very clear answer out of TOS, but for whatever reason, studies don't show up immediately in that list that I've shown you guys of shared items. Charts, if I shared a chart with you, it would show up immediately. For whatever reason, studies need a little more time, and from what I understand, it's a monthly update for studies to hit the list. I have tested out that on other studies that folks have shared with me, if they go in and edit them and push an update, that shows up immediately once the study's on the list. So I'm going to start laying the groundwork for us to have the ability to come into TOS, this tool section, and shared items, and end up with something down here that will have, our 3 tiers, 3 tools that I can update daily, and then for each tier of folks, they'll see that update down here, and where it says updates, it'll say update available every day. So I'm going to lay the groundwork now, start putting out those tools, and then updating just those 3 tools every day. And hopefully within a month or 2, it will show up on everybody's list. And you'll just have to come in and hit update once a day in here. So just a quick heads up that starting to lay the groundwork so that you can do that. And we're all learning together. And just another heads up that we will be somewhat consolidating tiers. I don't want to have any huge impact to any folks that are already in here. So most likely you guys will all be grandfathered in at your current price, with some date in the future where things will adjust just to get everybody on the same playing field. So just a heads up, things to come. And most likely starting tomorrow, I will be splitting up the tool into the 3 tiers. So, thanks for tuning in, folks. Good luck today. And yeah, as we say, no beast, no feast. Use your beast tool as a guide. Just like on Friday, with the huge gap down we had, that beast tool gave us decent longs and shorts all day. So, use it as a guide. And yeah, no beast, no feast. Good luck today, folks. It's gonna be a wild week. We should probably lower our expectations, not be expecting some like 2 to 20 moves, and, be prepared to just get our piece bit by bit. So yeah, good luck, and we'll see you in chat today.